Alrighty, good afternoon, slightly afternoon. Just got a recording underway. We've got a good crowd in here today. Mostly names that I do recognize. I'm actually scanning the list. It looks like actually we do have a few names I don't recognize. So if this is your first time attending one of my webinars, welcome. What I'm going to do is I'm going to treat today as if it's a regular Monday or Thursday webinar. For those of you that are not members and wondering really what does that mean, within the morning analysis service, in addition to providing analysis, which is video based each morning, I do a Monday and Thursday webinar each noon New York time. Those webinars last like 30 to 45 minutes, and that's really pretty much what I'm going to do now. I'm just going to go through the charts as if the only people within this particular webinar are members. So I will be making some references to things that we looked at this morning and yesterday morning. So for those of you that have, or I guess are not members, apologies if that provides a little bit of confusion, but it's only fair to those paying members that I do that. So one quick thing that I will do, and most of you that know me know that I'm appallingly bad at this. I typically just run through charts, and then for about 10 seconds at the end of the webinar, I mention the commercial side of things. I'm going to break the rules of what I normally do. If you go to this URL, which is basically cognicapital.com/promo. We're doing some special offers, morning analysis, which is what you're about to look at. We're doing $50 off the first month, and OmniTrades, which is James Farrow's service where he runs long-term trades on a multitude of vehicles. You can also get a special offer there. I'll make some references to those services throughout the webinar, but effectively what we're about to look at is analysis that comprises the morning analysis service. So with that being said, we're going to start by looking at treasuries. I'm going to look at treasuries, 30-year treasuries, 10-year notes. We're going to look at the dollar, E-mini S&P, and then we're going to go on look at gold and silver. And from there, we're going to go and look at some currencies. This is pretty much how I normally handle the webinar. So we'll start with the treasuries. So I started warning about something a couple of weeks back, as most of you, and again, I'm going to keep referencing most of you know, as all of the members that are in here today. So as most of you know, I started referencing these particular charts in treasuries about 2 weeks back, looking for a potential bounce in treasuries. If we get a bounce in treasuries, I am looking for a potential pullback in terms of equities. I made reference this morning to the fact that we were seeing a bounce in 30-year, a bounce in the 10-year, and yet the E-mini S&P was blindly moving north. And what I suggested was, because the dollar was also rolling over, and I know most of you are expecting me to say, well, if the dollar's moving lower, the E-mini S&P should be moving higher, but actually of late, that has not been the case. So what I've been looking at is treasuries bouncing, 10-year notes bouncing. I've been looking at the dollar falling and the yen falling. With all of that going on, I would expect to see the E-mini S&P taking a bit of a move to the downside. And so what I suggested, in fact, let me move the E-mini S&P into view. So what I suggested this morning was that the E-mini S&P might see a bit of a pullback from this level here, which is arrowed. The red arrow indicates the breakout traders that got long the E-mini S&P right here, because we had taken out a significant high. Significant high meaning this high to the left here, which occurred back on the 11th, which I think was like last Wednesday or Tuesday, I forget. No, last Wednesday. So we took out that high by just a few points, and it really was like maybe 2 points, 3 points. And so I was looking maybe for a bit of a pullback this morning. So what I said was, from this area here, maybe watch for some support down around this 2057 area. Now, this doesn't necessarily mean that I've turned bearish the E-mini S&P. It just means that maybe look for a bit of a pullback. If for those of you that were watching the ES a couple of days back, if you recall, we paid attention to support in this area here, and I was looking for a move higher into, and I talked about two levels that I would watch for potential resistance. We breached both of those levels of resistance at FOMC yesterday afternoon, and so as far as I'm concerned, this opens up a potential move ultimately to this area here, which is 2115. But what I would do is, rather than chase E-mini S&P higher, I would look to see whether, as I said, treasuries are moving higher, dollar is moving lower, yen is moving lower, and therefore I would expect ES to move lower. Well, it's now starting to do it. It's now starting to roll over, and has done since earlier this morning. I would look for support a little bit lower, down around about the 2057 area. So that's the E-mini S&P. As I said, bigger picture, we've got the 30-year here at weekly support that goes back to 2013. This is December 2013 trend line that I'm paying attention to, and I would then ultimately look for resistance in this area here. 10-year notes, absolutely the same story. We've got support that goes back a couple of years, back to like 2013, 2014. But what is key to me, and looking at this in terms of thematics, which is what I talk about a lot recently, which is finding correlated vehicles doing the same thing at the same time. There's nothing particularly profound about that, but it's what I do more and more. So in other words, I'm trying to find a working slope for a given vehicle. I'm then trying to find a working slope for a correlated or inversely correlated vehicle. And when I see similar vehicles doing similar things when they are correlated or inversely correlated, it will increase my confidence that something's going to happen. So just to make it really clear what I'm talking about, if I've got the 10-year notes coming down into support and hitting support like first, second week in November, at the very same time that the 30-year Treasuries is coming down and hitting support like second week in November, it adds to my confidence that we're going to see a bounce, okay? So that's what I've been looking at in terms of Treasuries. They're both bouncing to the upside, and so I would watch potentially for higher Treasuries. So in terms of both 10-year and in 30-year, and the dollar. So the dollar, we've been paying attention to the dollar. Probably the daily chart is the best one to watch for right now. This looks probably a bit of a mess for those of you that are not familiar with the chart, but to be clear, let me go back to this area here. So we were bearish the dollar throughout this period. Okay, so throughout this period here, we were bearish the dollar. And then we started paying attention to something, which is that we had a rising floor. The rising floor is this line right here. In other words, the floor has stepped up. If the floor steps up, my expectation is that the ceiling will step up. This again, it's not massively profound what I'm talking about. Let me try and drag the lines over and draw something in. So let's say that we have a downtrending slope. And what we're doing is we're moving from resistance to support in a fairly constant and consistent manner. And then we do this. What I will do is I will pay attention to the fact that we've now had a change in behavior. The change in behavior is the fact that our ceiling here and our floor here, which were very consistent, have now potentially changed, and now potentially we have a floor here. If we have a floor here, what do you think that might mean in terms of where the ceiling might go? Well, what I would look for, I wouldn't blindly look for the vehicle to do something like this, and I wouldn't just get long the position in this area here. What I would look for is a push through resistance. That would confirm to me that we have a change in behavior. Context is bullish at that point. I would then look for one of two things. I would look either for the resistance to become support for a leg to the upside, or what I would do is I would look for an uptrending slope. So I would look for something like this, like an uptrending channel, and try and play the vehicle back to the upside. So that's what I would look for. This is just like generic. That's what I look for. Now let's go back and look at what happened with the dollar. So again, we're back to the downtrending channel. We actually have a new rising floor. So what I talked about in terms of the floor rising is what we're seeing here. So therefore the ceiling, which is, by the way, here, I expect to see the ceiling breach to the upside, and that's what I would look for. So what I said back here, and by the way, whenever you see these blue lines like this or like this, all of these blue lines are drawn in contemporaneously. In other words, this line here starts on the 7th of October. I drew in these lines on the 7th of October, and it was the 12th or 13th, in fact, sorry, the 14th of October when we bounced. These lines here were drawn in on the 28th of October. We bounced on the 2nd of November. So I was looking for support here down around the 93.80s. That took us up beautifully. It took us up, though, not only to resistance, but through resistance. And so, therefore, as we just talked about a second ago, I would look for one of two things. I would look for either A, an uptrending slope, which, by the way, we are now watching. There is the uptrending slope, the modified shift. Or I would watch to see whether we would now fall back to find support along this line for a leg to the upside. So those are the two things that I would typically look for. And you can pretty much see that the dollar obliged. It fell back, hit support, and took a good move to the upside from the beginning of November. So that's working well. I turned bullish the dollar in really two areas. Number one, here, once we took the bounce from the raised floor, we turned should we say somewhat bullish, but once we took out resistance and it became support, we absolutely turned bullish in the dollar. And so we've risen back to the upside. That seems to be working out quite well. This morning, though, we turned a little bit more bearish. We've got resistance on our new uptrending slope, and just let me zoom out and give you a bit of perspective on that uptrending slope. There it is. So we got a bounce along the lower parallel, which is this floor here. We then have resistance here and here, which we breach to the upside, and so therefore I will do the very, very same thing that we were doing previously. I will look to see whether that resistance becomes support. In other words, does this resistance here and here become support? Right here. That's what I'm looking for. So when I say I turn bearish the dollar, I don't mean I think the dollar's about to plunge off of a cliff. What I mean is I'm looking for a pullback in the dollar. That's what I'm looking for, a pullback into around about the 98.60 area, and that's what I'm watching for. I've used a small time frame to try and get a grip, and it looks like we might be bouncing from a logical place as I speak, in fact. That's nicely timed. So here's what I've looked at for the last 2 to 3 days. Bearing in mind, it looks to me as if we're seeing a bit of a turn in the dollar. So what I do is I don't simply look at the daily chart, and bearing in mind the daily chart, it looks as if we're kind of like just like trading, like grinding sideways. What I do is I drill down to a 20-minute chart and I try and get some granularity on what's going on. So what we've been looking at for the last few days in the dollar is simply this. And I started talking 2 or 3 days ago, the beginning of the week, and I said, I want to see whether this resistance here and here becomes support. Becomes support in this area around here. That's what I've been looking for this week. Will that level, which is 99, let's call it 46, become support? Well, we got support on Tuesday morning. We got support on Wednesday morning. But now look, we get FOMC yesterday afternoon in this area right here. We gap lower last night. But what is absolutely key to me is that when we actually gap lower, what happens afterwards? You can see as well as I do. We reverse back to the upside and we find resistance. But where do we find resistance? We find resistance at what had previously been support. So what I warned about this morning, and again, let me try and get these lines out of the way. So again, these lines were drawn in contemporaneously. These were drawn in at around about 6:30 this morning when I was doing, I believe, my metals video, gold and silver video. I said I would look for a move up and resistance in this area here in the dollar. And that's precisely what's happened. So we talked a little while ago about the fact that we would look for changes of behavior on a slope. A slope is no different from the horizontal. So on the horizontal, I would effectively, whoops, that's not horizontal. I would look for the exact same thing. So if we actually have a nice channel that's working like this, and we push out of that channel, I look to see whether it becomes support. If it becomes support, that is my expectation, that we will see a leg to the upside. Again, there's nothing complicated or profound in what I'm doing here. I'm simply looking for very simple structures. But if you like, the missing ingredient or the X ingredient or the trick here is simply finding the right slopes. Now, in this case, it's not even a slope, it's a horizontal. So the channel I was watching this morning was this channel right here on the horizontal. And when we rose up at news, this was actually news this morning, 8:30 this morning, we rose up, hit the underside again, and we fell away hard. We've fallen away fairly hard. This move to the downside, by the way, signaled a move higher in gold and silver. So gold and silver have seen a nice pop to the upside. I know that James Farrow, for the first time in, I think James has been on the sidelines in gold and silver for weeks, and he finally took a long this morning in gold. And as it turns out, that was incredibly well timed. However, I'm still, we'll get to gold and silver, I digress. So the dollar's fallen. Where has it fallen to? Well, it's fallen actually to the next place I would look for support, which is the slope that we were paying attention to last week. And for those of you, again, that are members, you'll recall we were paying attention to this particular channel here last week. Then we get to Monday morning and we breach out of that particular channel. So we would then look, once we breach out of that channel, we would look to see whether we fall back and find support upon that channel. And that's exactly what we've just done. So I would watch the dollar closely now to see whether we actually move back to the upside. And by the way, I'm conscious of the fact that I'm spending like quarter of an hour looking at the dollar. I apologize for the amount of time I'm spending on this one chart, but I really want to try and just get across to you what I'm looking at within a chart. So it just doesn't look to you like I've just drawn random lines on a chart. So you can see how well the dollar has worked. And back to what I described earlier as being thematics, how I'm using the dollar to give me, shall we say, guidance in terms of what I'm expecting in terms of gold, silver, crude. By the way, crude is in a very interesting area right now. Where's crude? Here's crude. This is what I'm watching in terms of crude. Down at weekly support. We're at daily support. 20-minute, like getting granularity on the smaller time frame. There's a downtrending. But again, so what I'm doing is I'm using the dollar index to give me a bit of guidance in terms of what's happening elsewhere. So what else would this potentially help me with? The fact that I'm expecting potentially a bit of a pullback in the dollar based upon not only the 20-minute chart that we're looking at now, but also the daily chart and the fact that we've hit resistance in this area here. Well, obviously the currencies. So in addition to commodities, dollar taking a bit of a pullback, you'd expect the commodities to see a bit of a pushback to the upside. Obviously the euro, with such a massive inverse correlation to the dollar index, I would expect a pop in the euro, but there are other currencies. So for example, if I'm looking for a bounce in something like oil, I would also be looking for a bounce, or rather a dip, because it's an inverse currency, in the Canadian dollar. I'd be looking for a move in the Russian ruble, which has been working very nicely of late. Here's, in fact, where is it? There's the Russian ruble. So we've actually turned bullish the Russian ruble as a pair over the last maybe month, 6 weeks, and that seems to be working out quite nicely. So I'm watching the Russian ruble quite closely, close to where we are right now. Again, it's an inverse currency. So as we rise, that is the ruble weakening. And typically what you'll see is if you're seeing crude slide, you'll see the Canadian dollar pop and you'll see the Russian ruble pop, because they are both inverse currencies. So again, I'm using the dollar to give me guidance in terms of what's going on elsewhere in terms of not only currencies, but also in terms of commodities. So I think I've talked the dollar to death. We've looked at treasuries. Let's look at the currencies, and then we'll move from the currencies into looking at gold and silver. So let's pull the currencies to the front. So Australian dollar. So this is one that I've been looking for a pop in. I've actually been looking for Trip. I just saw your comment. Apologies. I've just realized there's a whole bunch of chat that I've just ignored. So hello to all of the people that have said hello. Apologies. If you zoom out, would you extend that lowest horizontal? Trip, I'm sorry. $98 that is, I'm guessing. Sorry, Trip. And then Trip says, what's the context in the ruble chart? It's bullish. Trip, which obviously means a weakening in the ruble. Okay, sorry about that. Now, let me move on. Currencies. So I turned bullish the Australian dollar and bullish the British pound earlier this week. And I was looking for a move higher in both of those pairs. As you can see, the Australian dollar is working out relatively well. And the British pound is working out relatively well. Both of them have actually worked incredibly well. So why was I bullish the Australian dollar? Let's talk about that for a second. And for those of you that are interested in gold, this will obviously have some relevance. Or at least historically, there's been a reasonable correlation between Australian dollar and gold. Personally, I think the correlation between the two is actually pretty shaky, but regardless. So here's the Australian dollar. And at first blush, you might look at the chart and say, God, that looks a mess. It looks pretty good now. We've actually got a beautiful slope that was working throughout the summer. And just to give you an idea, it was working incredibly well throughout the summer in terms of both calling support and in terms of calling resistance, back to support, back to resistance. But we started to get a change of behavior. And the change in behavior came in the beginning of October. And I've talked about this a lot recently. We had a huge breach out of the downtrending slope. So once we push out of the downtrending slope, I then look, and by the way, again, support in this area here became resistance in this area. Resistance in this area here became support in this area here, and then bang, up we go. We've now firmly breached the downtrending slope. And so I've turned much, much more bullish. Doesn't mean that I think the Australian dollar is going to rise 1,000 pips, but what it means is I'm looking for an opportunity to get long the Australian dollar. Now look, we have resistance, resistance, and we continue lower. Now though, resistance, 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 and you can see throughout this period we were watching for resistance. So even though, yes, I have turned bullish the Australian dollar, you can see back here, which was the 30th of October. So this is the end of October, and I'm paying attention to a couple of things. Number one, we've breached our downtrending slope, but number two, look where support is. Look at the support here. Look at the bigger context. This is the ceiling of the fork. We now have it as a floor. So we now have confirmed bullish context. We've now confirmed that resistance has become support. That being said, back here at the end of October, I said, watch here for resistance. Again, these blue lines were drawn in on the, it looks like on the Sunday afternoon, I'm guessing. We rose up into the Monday, tagged that resistance, fell back. Fell back from 72 and change to 71.5, about 70 pips. Came back up, tagged it a second time. But now look, we fall from 72 and change down to, well, 70 and change. So 200 pips to the downside. But where would you look for support? Well, of course, you'd look for support here. And that's precisely where we bounced again. So where would you look for resistance again? Well, you'd look for resistance back in this area here. The blue lines have been removed at this point, but this is exactly where we've been looking for resistance. Here, and here, and here. Until 2 days ago, I spotted something very interesting. And it was simply the fact that we now have a rising floor. This rising floor right here made me very wary of the Australian dollar, that there was a potential for us to take out resistance. Think back to what I said at the beginning. If your floor rises, you have an expectation that your ceiling will rise. Sure enough, what we had overnight was a big pop through resistance in the Australian dollar. The New Zealand dollar, which has a fairly tenuous correlation to the Australian dollar, has followed suit, albeit it seems to be lagging a little. But again, I just wanted to talk about why is it that 2 days ago I started to look for a move higher in the Australian dollar. And here it is. And that move, it's not the biggest move in the world, but we're up from 70.80 to 72 and change. So we've moved up about 140 pips. This morning, and the reason for this circle right here, the smaller circle, is this is what I drew in at 6 o'clock or 7 o'clock this morning. And what I said was, when we were trading down in this area here, I said, I would now look for resistance up around the 72.10 area. So far, we've topped at 72.14, 4 pips from that line. That, to me, is semi-validating this uptrending slope that I've now drawn in, which is an Andrews fork, this particular blue fork to the upside. Again, think back to what I said a little earlier. If you breach a downtrending slope, you can look for a couple of ways to take advantage of that. Number one, you can look for the breach to then be followed by support, which, by the way, we did get. Think back. There was your breach. There was your support. Twice. Up you go. That's exactly what we've been looking for. But what was the second thing I said to do? Draw in an uptrending slope. We drew in this uptrending slope again this morning around about 7 o'clock in the morning, paid attention to the fact that we got a beautiful bounce at the lower parallel that had already occurred, to be fair. And therefore, if this is an uptrending slope that is active, this slope right here, where would you look for resistance? Well, what you would do is you would say to yourself, where was the most recent significant high? Here it is. And therefore, follow the slope along. That's the next place to look for resistance. And that's where we've topped. So, I mean, I hope some of this is clear. I've had almost no comments from anyone. So it either means no one can hear me, everyone's shaking their head, or everyone's thinking, God, this is wonderful. And it's one of those three. But I hope I'm kind of making myself clear in terms of the, shall we say, the thought process that goes into looking for the moves ahead of time. Seeing the Australian dollar now, and I've seen on Twitter this morning people calling for a stronger Australian dollar. Well, it's a bit bloody late now. You know, the horse has bolted. We've gone through the trend line. That's not the trick. The trick is 2 days ago, seeing these lows here, which most people would not see as being anything significant. If you can see these two lows down here as being significant and indicating a leg to the upside, that's what I would be looking for. And that helps you get ahead of the 8 ball. Thanks, guys. I've got some comments now. Okay, so that's the Australian dollar. Canadian dollar. So here's another one that I've been looking for a bit of a pullback in. And again, all of these circles were drawn in on the relevant days. So what I've been paying attention to, and let me zoom out to give you an idea. So I've been paying attention ultimately to a very different slope. I've been paying attention to the blue slope. That's what I've been watching in terms of the Canadian dollar. So back in this area here, whenever this is the 3rd of November. So 3rd of November, I was looking for support back in this area here, which worked out relatively well. But then when we started moving back to the upside, I would have looked for resistance here. That's the place I would have looked for resistance in the Canadian dollar. And so I started paying attention to the fact that, well, we have a gap. I mean, you can see that the Canadian dollar just doesn't quite get up to where resistance should be. So I kind of made a mental note, but I didn't draw anything in. But then, when on, I believe this was a Thursday, on the Thursday, when we come back up and we top right here at 33.40 and start to pull back, at that point, I've seen enough. Now, at this point, I'm drawing in a trend line, simple trend line, and I'm saying to myself, okay, now it appears that the Canadian dollar is, shall we say, dancing to a different tune. It's abiding by a very slightly different slope. And so I drew in this green line here, and that's the line that we've really been paying attention to. And so, sure enough, it topped there Thursday, fell back. Came back up Friday, fell back. We saw a flush that occurred on Monday. I think too many people get suckered into flushes. This, and I said it at the time, and I think I said it on the noon webinar Monday. This flush means absolutely nothing to me. Most people will look at it and say, it looks like we're breaching. Look at the close. That's what I'm much more interested in. I don't particularly care about a slight push through a line. I'm much more interested in where are we 2 or 3 hours later. What I said in terms of metals this morning, gold and silver. Well, I was watching gold see a bit of a pop to the upside, and I saw it push up into about the low to mid 1180s, or sorry, 1080s. And as I said at the time, it's encouraging. It's encouraging. We'll look at gold and silver in just a minute. But what I'm much more interested in than where we go in the next 20 minutes is where are we at 3 or 4 o'clock this afternoon? In other words, have we maintained altitude, or are we simply going to fall back into the 1070s? So same here, Canadian dollar. Seeing a pop through the line at 33.50 up to 33.70, and again, you just bet your bottom dollar that there are going to be people getting long in this area here thinking a trend line just broke, and then sure enough we close back in the 33.30s and ultimately go back into the 32s, come back up, and again look at this. This is back on the 17th, so this was 2 days ago. What I said was look for a move up and resistance at this line. And that's just really reinforcing what I just said a second ago. I'm not saying I think that this is the place to watch now, although to be absolutely fair, I drew in those circles and said that's the second place to watch. This is the first place to watch. That is the place to watch for resistance. FOMC came out yesterday. We tagged that resistance once more. Bang, down we go. So this morning, again, 7 o'clock this morning, I say to myself, okay, finally, we've got the fall away from resistance that we've been looking at for the last, what, week, 2 weeks? Probably 2 weeks. So where would you look for support? And what I paid attention to this morning was, and let me get all the circles out of the way. So as of this morning, that was what I looked at. I came in at 7 o'clock, looked at my charts, realized that we were bottoming. You just draw yourself a simple trend line. Once again, all I've done is cloned the line up above. I've drawn it across, and I'm paying attention to the fact that we're putting in a low which abides by the same slope. So what I said this morning to myself was, we've got the Australian dollar pushing higher. We've got the Kiwi pushing higher. We've got the dollar starting to roll over a bit. We're seeing very different behavior out of gold and silver. And so therefore, I'm going to look for a bit of a bounce in the Canadian dollar. And that's what we got. We got the bounce from 32.40s to 33. So about 60 pips in the Canadian dollar. Again, it's not the biggest bounce in the world. I would still probably be a bit cautious of something like this. In other words, if you look closely, what you can see I'm highlighting. And this is just a brand new line I'm just drawing in now. Support, 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 becoming... Be careful. Be careful the Canadian dollar right now, okay? So I would watch around 33 for resistance. I would watch around 32.50 for support. A breach of either of those would give me a hint in terms of direction, not only for the Canadian dollar, but it would also give me guidance for something like the Russian ruble and the crude oil as well. Whew. We're covering a lot of ground. So that's the Aussie, the CAD. Swiss franc, there's not a lot I can add other than what I've been saying for the last few days, which is I would look for support in this area right here, where all the circles are. And let me put that line back in. So again, as I keep saying, all of these blue lines are drawn in at the time. So these blue lines were drawn in on the 18th, saying looking for support here. These were drawn in this morning, saying I would still look for support down here. Well, we came down. I want to see where we close on this bar. It's great that we've come down. It's great that we've hit support, and it's great that we're bouncing. What I'm more interested, though, is where are we on the close of this bar, which is at 1 o'clock in 30 minutes time. So if we can close... let's say, at like 10.55 or higher, that would be very, very promising for Swiss franc for a continuation back to the upside. And again, all we've been doing here is paying attention to a channel for the last maybe week or two, looking for resistance. In fact, that was I believe that was a Tuesday webinar. We hit resistance, we fell back. Watch for support, we bounced. Resistance, we fell back. Resistance, we fell back. We looked for support, we got it. There was a support once more. This was just Monday of this week. Again, what I looked for on Sunday afternoon. So on Sunday, what I drew in was I would look for support. Let's try that again. Down here for a leg to the upside. And it bounced. Beautiful bounce. But we now have a change of behavior. What's the change of behavior? Well, look at it. We got a beautiful bounce here. And you should run into resistance here. We breached through it. So if you're still trailing a long position from 10040, what you really need to see happen now is you need to see this resistance, which is breached, become support for a fresh leg to the upside. And so that's what we've been looking for. So again, this is very, very consistent with what I've been talking about on prior charts. I'm simply looking for a working channel to continue working. And when I have a change of behavior, I'm looking to see whether support becomes resistance or resistance becomes support. And from a thematic perspective, I'm looking to see whether the same things in correlated or inversely correlated vehicles are doing the same thing. So again, if you think back to the very beginning of the session when we talked about treasuries, and treasuries bouncing on the 10-year at the same time that treasuries on the 30-year bouncing at the very same time. That's exactly what I'm talking about when I say looking for correlated vehicles to do the very same thing at the very same time. Let me jump back up. I think we've gone through, let's have a look here. What else is there to look at? Euro is in an interesting place, but again, following a downtrending channel. I want to see the close on this bar right here. I don't particularly, as I keep saying, I'm not worried about this slight move above resistance. The circles tell me where to look for resistance. Do not get too suckered into these moves above a line. The line is at 107.36. The high is 107.64. So we're like 28 pips above the line. It means nothing. What means something is where we are at 1 o'clock. If we reverse below and we close, let's say we close in the euro down in this area here, that will be a much more bearish bar than bullish bar as far as I'm concerned. And at that point, I would look for a continuation lower. Keep an eye on that dollar though. British pound 240-minute chart. So we turned bullish the British pound actually back on the 9th. So again, for those of you remember back what I'd said back here on the, I believe that was on a Sunday, but I could be wrong. What I said was I would look for a move higher, fall back, find support upon this line for a leg to the upside. That's what I was looking at around about like 10 days ago, so thereabouts. It worked out absolutely perfect. And you can see that's exactly what happened. We actually got a nice push up. The push up occurred Sunday evening. We came back down. We bounced on the Monday morning. And really, we never looked back from that point. That was down around 50.5. So about 150.55. And then what I started paying attention to for the last maybe week is the fact that we're hitting horizontal support / resistance. Let me try and get some circles out of the way. So look, you've got support in this area right here. And then that has morphed into resistance here and here. And in fact, you can see what I've been talking about throughout is that's the place to look for resistance. We hit it again 2 days ago, Tuesday. We hit it again yesterday, Wednesday. But I've been looking for a move higher in the British pound through resistance. And that's what I talked about yesterday in the FX service and this morning in the morning analysis service. And then finally, we have it. We've got the move higher in the British pound. Next place I'm looking for the British pound to see resistance is going to be up in the sort of like 54 and 40s kind of like area. There is a downtrending channel. It is a downtrending channel, but the next resistance for me is 54.50s or thereabouts. Japanese yen, this was a great breakout. Well, sorry, it wasn't a great breakout trade. It was a great example of what happens to breakout traders. Look at the high here. Look at this high. This is at 123.60. Look at the high yesterday, 123.75. This significant high, 123.60, goes all the way back to here, which is last August, or sorry, August of this year. So you just bet your bottom dollar there's going to be buy stops sitting right there. And sure enough, we come up, we tag those buy stops, we reverse back to the downside. What I said this morning was I think what I actually said this morning was I'd be a little bit on the sidelines for the Japanese yen. However, the only place I would look for support is where these 3 or 4 circles are drawn. Bearing in mind again, these circles were drawn in when the yen was in this area here. We've come down, we've tagged that support, and again, I'm going to watch to see where we bounce. So far, so good. We've come down, we've hit the support, we're bouncing away from it. The support is at 122.65. We're up about 15 pips. It really isn't much to talk about, but again, again, I'm going to watch to see where that bar closes at 1 o'clock. So far, so good. The Kiwi, I think we looked at the Kiwi. No, maybe we didn't. Again, look at the Kiwi, downtrending channel. I've been looking at the Aussie and the Kiwi hand in hand. The move higher in the Aussie, we're seeing a move higher in the Kiwi. And what I said, I believe this was yesterday, was I would look for a move through resistance, or maybe this was this morning. Look for support for a leg to the upside. Well, all we've really done is continued north. What we've been looking at over the last week is resistance, resistance. Again, what I said on Sunday, this was actually Sunday afternoon ahead of the Asian Open. I said, watch for resistance just above here, around 65.50. We fell from 65.50 down to 64.50, and in fact down to 64.30. So 100, 120 pips. Reversed hard to the upside. But what's much more interesting to me than the fact that we reversed hard to the upside is that instead of holding at resistance here, look closely at what we did. We moved higher. Now look at subsequent bars. Look at the lows on subsequent bars. Found support, leg to the upside. That's kind of what I wanted to look at in terms of currencies. By the way, here's another reason why I'm bullish the Australian dollar. This is a daily chart for the Australian dollar. Again, look at the downtrending channel. Look how well the downtrending channel lasted throughout the early and latter part of the summer. Look how we had the breach to the upside out of our downtrending channel. Look how when we fell back, we found support once, twice, 3 times. Resistance, resistance, resistance. We are now breaching to the upside. So I'm still bullish the Australian dollar. I'm still bullish commodity currencies generally. However, I will become very wary of the Australian dollar when we get to here. Once we get to this kind of area here, I'm going to become very, very wary of the Australian dollar. So far, so good. But again, I'm just trying to explain to you that I'm using different time frames and I'm using different correlated vehicles to build a picture. So that's the Australian dollar on a daily. What else is going on a day? Actually, I'll tell you one maybe to pay attention to. That's the Japanese yen on a monthly chart. That goes back to 1990, a trend line. So just maybe pay a little bit of attention to that. I think there you go, Canadian dollar hitting resistance and falling away. Again, we've got resistance that has lasted since the back end of October, which we're falling away from, and that has ramifications for crude oil. Swiss franc, we turned bullish Swiss franc back in this area here when we breached a downtrending channel. There's your downtrending channel. So when we breach that channel, we become bullish. The euro, I'm not going to go through all the dailies because we just don't really have time. That's why I'm kind of like just scanning through them. Again, downtrending slope in the euro. And once again, you can see that we actually have resistance become support, support. So I'm expecting and looking for a move back to the upside in the euro. British pound, we're in a bit of a wedge. So I'm going to wait to see whether we can breach this wedge to the upside. Let me jump down, look at gold and silver, because I suspect that a lot of you are kind of waiting for gold and silver. Where are we? In fact, let me go down to the silver chart initially. So look, here's silver. Oh, there's the pullback. Good. Well, I'm guessing some of you don't want to see that, but this is exactly what I thought might happen. So this is something I do. I don't typically annotate the charts as much as this. This is just something I look for. I look for either A, repeated symmetry on a chart, or B, repeated behavior. Think about gold and silver, and I know that there's, should we say, a huge percentage of people that consider them to be heavily manipulated or capped or controlled or managed or whatever you want to call it. So look at the last week or so. Look at how all of these sell-offs that are occurring, not all of them actually, that's unfair. 8 o'clock in the morning, we see a sell-off. 8 o'clock in the morning, a sell-off. 8 o'clock, 8 o'clock, 8 o'clock. So these are all 8 o'clock sell-offs. So this is London, or sorry, this is the US arriving at their desks, and the next thing, gold and silver have been smacked lower. So the difference, or the standouts are here. So now we have a 3 o'clock sell-off. So this is, think about it, what is 3 o'clock in New York, in London? It's actually 8 o'clock in the morning. So yeah, apologies, Rick has just said, is this Eastern? Yes, everything you're looking at is New York time, Eastern time. So think about this high here. This is 3 a.m. So this is actually 8 a.m. in London. So this, to me, is a London-inspired sell-off. Then we have another one here at 5 o'clock. It's European anyway. So these two here, to me, are European-inspired sell-offs. But everything else, actually, here's another European one, 5 a.m. Everything else, though, is actually driven lower out of the US. So those are all the sell-offs. But look where they bottom. Look at this. 10 in the morning, 1 o'clock, 1 o'clock, 10, 10, 10, say 12, 1 o'clock, 12, 1 o'clock. It's very, very consistent. In other words, if you are personally bullish silver at like 8:30 in the morning, you're probably in trouble. Or at least that's been the case for the last week or so. And all of these sell-offs will take you into lunchtime. And then at lunchtime, you will see a meander back to the upside through Asia. And that's happened pretty much every single night. There's been a recovery through Asia into the morning, and then the sell-off starts again. There's a recovery through Asia, and a sell-off starts again. Until yesterday. And so you were probably all expecting me to say, until this morning. No, it was actually until, sorry, not even yesterday, it was Tuesday. Look at this. This was Tuesday coming until yesterday morning. The difference was right here, and I arrowed it with 4 or 5 arrows. We have a change in behavior, and it's simply that Asia is actually selling gold and silver. Now, I don't know what it means, but in every other prior day, gold and silver had recovered during the Asian session, except for Tuesday night, or really the Wednesday Asian session, right here, when again, they were sold off into Asia. But again, we're back to business as usual yesterday morning. 5 o'clock sell-off, again, took us down to noon. So where is a major change of behavior? Yes, it's absolutely this morning. What happened at 8 o'clock this morning? Did we get our usual 8 o'clock smackdown? No, we didn't. Actually, we got the absolute opposite. If you look down here, you'll see on the x-axis, wherever I move my mouse, the little vertical line that you see scrolling from left to right shows you what time the bar is. And as you can see, this is around 8 o'clock in the morning that we actually saw a pop. I'm not saying that silver's going to $20 from here. I'm not telling you that gold's on its way to $2,000. What I'm telling you is this is a change of behavior. This is something that we haven't seen for the last week, week and a half. And so what I would watch for is really nothing more than, and again, think back to what I said earlier. I'm very much less interested in where a vehicle goes to. I'm much more interested in where is it 3-4 hours later. Can we maintain that altitude? I talked about that earlier. Look at silver. Big pop to the upside from 14.10 to 14.36. By the way, I say a big pop to the upside. This is 25 cents. We're kind of grinding our way back though, which I find a little bit disconcerting. I'm happy that we have a change in behavior. That's great. We haven't yet broken out of the downtrending slope, by the way. This is not a breakout of the slope. What I would do is I would simply draw in a sliding parallel, something like this. And what I will watch for is to see what happens if we reverse back to the upside. Do we see fresh resistance, or do we actually get fresh support? But we have got a change of behavior. We have, for the very first time in a week, seen an 8 o'clock buying instead of an 8 o'clock selling. So don't take away too much from this. I'm trying to be really careful here. I'm not telling you that gold and silver are about to spike to the moon. All I'm telling you is something has changed in the way that they are being traded through the pit open. I will watch to see whether this change of behavior continues, and what we will look for tomorrow morning on larger time frames is to see whether the support that we've been watching, in fact, let me step up there right now, continues to hold. So gold and silver, and it probably looks like a fairly interesting chart by virtue of the fact that we've had such a move to the downside out of FOMC. It's been just a straight line to the downside. But did we have any warning? Was there any way we could have known that something was going to happen? Maybe not to this extent, but is there any way that we saw something coming in terms of gold or silver coming out of FOMC last month? Yes, absolutely. So let's go back to the 28th of last month, which I believe was somewhere around FOMC. So we had been paying attention to an uptrending channel in silver. This is what we've been paying attention to through October. And then we had a change in behavior. So again, look back to what we've been looking for. We've been looking, as I said back here on the 7th, look for support. Got it. Beautiful bounce. Nice bounce from 1540, took us up to 16.0, whatever it is, 16.05, let's call it. Where would you still look for support? Well, right back here. And this is what I said on the 15th. I would still look for support here. As long as a line is working, I will keep looking for support. We fell through it. And I drew in the arrows to bring attention to members to the fact that we really have just had a significant change of behavior. Our support back here has just morphed into resistance. down we go. Then we recover. And I remember this move to the upside and everyone getting very excited. And all I said at the time was, all we've done is risen straight back up into resistance. And in fact, look at the close on this particular bar right here. We hit that resistance and we fall hard. And then we kind of grind sideways into FOMC. And look what happens at FOMC. We spike higher. Tag resistance again. And again, if you're looking at the slope, you will hopefully agree there is absolutely nothing bearish about that higher right there. Because what had been support back here has become resistance, resistance, resistance. So you would absolutely be bearish in this area. Is there anything else that would make you bearish? Absolutely. Drawing a horizontal. Why would I be bearish up here? Think about what I talked about, breakout traders. Breakout traders are going to be saying to themselves, it's FOMC this afternoon. If we can take out sort of 16.20 to the upside, we're on our way to $30 or $50. So sure enough, you'll have buy stops in this area here, people trying to get into their longs. They get stopped up into their longs, and that turns out to be the high. The point I'm trying to make is we were already cautious in silver well before FOMC, to the tune of a week or more, because we had resistance, resistance, resistance. Again, that was the high, and we haven't really turned back since then. That being said, I'm now watching to see whether our prior downtrending channel... Francois says, are breakout traders still alive? Good question, Francois. I don't know. I hold a mirror over their mouths. I don't know. But look, resistance in this area right here became kind of support in this area here. But regardless, support, 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 support. That's what I'm watching in silver right now. I'm watching simply to see whether we can break out of this channel. And you can see this morning, that's exactly what I drew in. This was about 6 o'clock this morning. I drew in and I said, this is the place to look for resistance. You need to see a push through this channel before I become bullish. Now, have we done that? No, we haven't. Again, think back to what I keep saying. This doesn't mean much to me. What I'm much more interested in is where are we a couple of bars further on? Do we actually fall back within the channel? So far, we've just fallen back within the channel. Honestly, nothing has changed. We are still within this channel. You need a move, a sustained move above 1440. That's what I need to see in silver. So gold, did we have any warning? Again, let's go back to FOMC. This was the 28th. We'd been following support. Here's our support. We got one bounce. We got a second bounce. We got a myriad of bounces. We got like another boom, 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 boom. Support all the way along here from the Friday into the, it looks like Monday, Tuesday, into Tuesday night. And what I said on the 26th, which is, I believe, 2 days prior to FOMC, was I would look for resistance in this area right here. We'd already had resistance once. I'm looking for resistance in this area right here. Add to that the fact that we also have a potential downtrending line with resistance in the same area. This is again the place to look for resistance, right in this area here. You can see that gold came up, tagged, well, near as damn it tagged it. Again though, look at the prior highs. Look at the prior high right here, which is at 11.79. We take it out to the tune of about $4. In fact, we even take out the next significant high right here. So we take out both of these highs by just a couple of bucks, and that's it. It's all over. Down we go. That again turned out to be the high. Down we go. And again, as with silver, I'm watching gold at what I consider to be potential support. We talked about this several days recently. Resistance becoming support, support, support. I'm watching to see whether we're going to get a leg back to the upside. I don't have any confirmation of it just yet. I wouldn't get too excited about anything in terms of gold or silver yet. I would be watching. He says, pausing for dramatic effect. I would be watching the dollar. I would be watching the dollar. I do not personally believe, by the way, that gold and silver are very well inversely correlated to the dollar right now. I think it's a very sloppy correlation. However, I would keep an eye on it. I talked about this at the very beginning of the session, about the fact that we turned bearish the dollar, that we were looking for resistance at 99.46 this morning. We topped at 99.52, 6 cents away. Bang, down we go. And again, as I said, what, like half an hour, 40 minutes ago? Resistance, support. I'm watching to see whether we get a leg back to the upside in the dollar. So there you go, guys. I'm kind of running out of steam. This is a pretty, I think, typical webinar for morning analysis. I hope you found it useful. I'm really just trying to show you how I look at charts. Again, if this is something that in any way appeals to you and you think it's something you want to see on a morning or daily basis, you can either, by the way, just go to the calendar, which isn't in fact linked here for some very odd reason. I have to work out why it's not. Or you can just go to this URL, coglancapital.com/promo, and you get discounted access. Look at the analysis every morning, and we have all of the old videos sitting in the calendar, so there's a whole bunch of analysis to look at. Don't see any more questions. Well, in fact, sorry, I've got some people asking me to look at more vehicles, but again, we looked at crude a little earlier, briefly, albeit, but we did look at crude a little bit earlier. So I will leave it at that. Boom, 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 boom. Hang on. Paul says, can the same slope analysis be used on a 5-minute? Yes, Paul, absolutely, 100%. Not that this is something that I typically show or talk about, but I was using a 1-minute chart in the E-mini S&P yesterday late morning to see whether we were actually finding support for a leg to the upside, and it worked out phenomenally well. The 1-minute fork actually held beautifully to the upside. But again, I would just use that intraday just very briefly just to see whether something I think is happening on a larger time frame is in fact happening. Guys, I'm going to leave it at that. The recording will be up on the site a little later on this afternoon. Everyone that's attended the webinar will be emailed a link to the recording in case they find it of use to review. Again, I hope I managed to cover some vehicles that you thought were useful, and hopefully I'll see you all again sometime in the future. Take care, guys. Be safe. Bye-bye.